Sure enough, we've got the mighty Dow turning in a little bit of positive performance. Choppy trading, once again, a huge dump of economic data. And you heard my friend David Tepper yesterday perhaps talking about how the data is still too hot, particularly on wages. This data, once again, frankly, is not conclusive enough to say that the Fed is done tightening.
Mm-hmm. Yeah, it still sounds like 25 basis points, I think, at the next meeting. So, more raises
50,
to come.
Might 50.
Well, I guess it also depends, too, what we see in December as well.
We need to see that December unemployment report show that we're back to 4%. 4% is the magic number, according to James Corman, who runs Morgan Stanley.
Right, 4% unemployment, 4%, what was wages? Yeah. The three fours.
I mean, we got this, we have the core deflator numbers that the Fed looks at. They were not good enough. Durable good orders were weak, but that wasn't so weak. And then against that, we got oil going up. Mm-hmm. Now, oil is not nearly as important as we thought it was. I thought it was very important to the calculation. They're looking at wages. But we know that our oil companies do well when oil is at above 80.
Sure.
We all get all those yields that we're talking about.
Yeah.
And the distributions for Pioneer, for Coterra. We get terrific distributions. And of course, we got Halliburton on the upside.
Yeah.
So we have enough at plus 80 to really make a lot of money. Now, where were we at Devon? 58 yesterday. It's amazing.
Yeah.
Halliburton's up nicely.
Yeah, and that's, the move in energy today is why you have energy top outperformer. Meanwhile, tech is still the problem child. Was the largest underperforming sector of the day so far.
That tonight. I mean, the problem is that you have to own stocks that make things and do stuff, that pay back some of their earnings. They do have earnings. They can't be valued expensively. And none of those, very few of the tech companies that people buy fit that.
Mm-hmm. We do have the market is technically oversold for the oscillator. It dipped shortly out of oversold territory, but it creeped back in after yesterday's nasty declines. Kind of goes still hand in hand with what Larry Williams was saying in that Thursday, perhaps the low was the optimal buying point, which we took advantage of when we added to
Emerson, which was a great price. And I continue to think that we should be looking, and will, because it's minus 4.3 in the oscillator, looking to buy things here because I still think that there's value. But the value comes in what we said. It's not in fads. It's not in interesting stocks. I'm not looking here to buy Oatly. I'm not looking here to buy Warby Parker. No, we're trying to find which of our stocks that are inexpensive on a traditional PE basis that return capital. And we are old-fashioned, and old-fashioned makes money. Boring makes money. Smucker makes money. Campbell's makes money.
Right.
I am tempted to go back over the food group. General Mills had a fantastic quarter. They've moved a great deal.
Yeah, and all these companies are really they've had defensive growth. It's been indifferent to what's happened in the economy versus, say, where you really got hurt this year was in a lot of stocks that were perceived as secular growth companies, but it turned out they were much more levered to the economy, unsustainable growth rates, too much inventory in the system.
It's all happened.
Defensive growth being staples.
Right.
We've been able to find some Constellation Brands, Costco. Healthcare, a big defensive growth area.
Yeah, that worked.
Lilly, Humana. We had AbbVie for most of the year, made a lot of money there.
Look, I think that what's happened is that the market reverted to the way it was in 2001-2, which is that you wanted to buy Coca-Cola, you wanted to buy Pepsi. Those worked. You wanted to buy Lilly, you wanted to buy Merck. Pepsi got away from us. I feel badly about that. Coke is getting away from us. I don't want to hear any new names. We have a lot of names on the list. But I do think that Chipotle is going to get away from us because their raw costs are coming down. There are things that are working, but they all have to be valued at reasonable prices. And you need to see a Pepsi not be as expensive as it is right now because it won't have room to climb. Because if the Fed continues to tighten, obviously higher rates means you're not going to pay up higher for price earnings multiples. So it's been a very rough run. I'd rather buy Constellation than I would Pepsi. Right?
Yeah, and we're just kind of going over some themes of the year that was, which was obviously a down year for the market. Cash was always your friend this year. Always wish you have more in a down market. We're at about 10.5% after the.
I'd like to see 0.5% put to work today. I would like to see that put to work.
and that's out of discipline to the
Yes, the
oversold
oscillator,
nature of the
because
market.
what I see happening with end of the year tax loss selling. Important to point out that China is going through a burn through. They're going to do Omicron as if everybody gets Omicron, which they will, because it's uh, unstoppable. I've been telling them over and over again, they haven't seemed to care, but now it's starting to realize that it's 37 million people.
Yeah, the numbers are extraordinary out of there. It was reported 37 million people may have been infected with COVID in a single day. Even more, about some reports have said nearly 18% of the population contracted the virus in the first 20 days of December. So they're going through a burn through right now.
And you have to remember that it doesn't, if 18, it's not one of those things where it's 18 and then it's 20. It's 18 and these people infect 8 to 9 people. So it's an exponential issue, like when you were in elementary school.
It sounds like China might be going through a little bit standstill just as they navigate this one surge. But after that, I mean, to me, it sounds like they're getting away from zero COVID faster than anyone thought. Perhaps that's an upside surprise for 2023.
Absolutely. I mean, you'll just burn through it. I mean, that's the thing that Omicron is just known for, and they've got Omicron. Now, Alphabet Sunday Ticket. Here's a stock that is selling at an incredibly low multiple, that especially when you take out the cash, that is doing a very good job. Unfortunately, it's levered advertising, but they got the Alphabet Sunday Ticket, which is going to, I think, allow YouTube to be up. Remember, we have to have companies, not only do companies have to be valued cheaply, which this is, but they have to have up earnings. Now, a lot of companies, you and I were talking about, you used the term over earn during the COVID period, but in other words, COVID was good for them. And anybody COVID was good for it's now bad because they don't have COVID.
Yeah, a lot of resetting back to 2019 levels. And we've been talking about Sunday Ticket the last few days in morning meeting. We put out a note out yesterday. Great for YouTube TV. Perhaps it increases, accelerates.
Yep, they want to be interactive.
Retention and also acquisition, kind of like what Sunday, the Thursday games were for Amazon Prime. Yeah. Citi pointed that out in a note today.
And it's very positive for Amazon Prime. It'll be very positive for Google. And then we should just recap the last monthly meeting of the year, some thoughts. Well, you needed to see companies with up earnings that were defensive, that paid back dividends. It's kind of wistful because they're not the companies that you like. We have other companies that...
Positive free cash flow you needed to...
Staples. I mean... for instance, Lilly worked well because they've got a new drug. Costco worked well because it's a great place to shop. Humana worked well because they had the best Medicare Advantage. These companies had a secular growth going for them and a cyclical kicker within them. And there are very few that had that. This was a terrible year for stocks. I wish obviously it's our first year doing this, but...
All right, guys, let me just touch the base with some stocks that we want to talk about. We want to talk about Emerson. As you guys know, the investment club recently bought Emerson. If you're just watching this or you're watching it a couple of days after, it is still a great opportunity for Emerson. It's still around the 90-something dollar mark. Not sure if it's 95 or 96 with a 2% dividend. So, guys, Emerson still remain a good buy. Let us talk about Constellation a little bit. Constellation, the beer makers, as Jim always say, people drink more beer in a recession. So you want to take a look at Constellation. It is around 231 STZ for short. So you could look up that stock. Still think that the China opening is getting there. I still think that Starbucks is good, guys. I still think Estee Lauder, they doesn't give a good dividend as Starbucks. Starbucks give like a 2% dividend, and Starbucks is in the 98, somewhere around that mark. But if I have to choose right now, I will be buying Alphabet. That's just because of all the stuff that's going on with the Sunday Ticket, as Jim Cramer says, where they will be getting the NFL stuff. So consider taking care of Alphabet. Alphabet is a stock that's going to go higher, and I don't want you to miss the opportunity to buy stock. You know how great of a company Alphabet is and how great of a company YouTube is, because I show you watching this show on YouTube. So guys, think about Alphabet. I'm pounding the table on Alphabet because I don't want when 2023 comes around, you lose the opportunity to buy Alphabet. Eli Lilly, I'm not too sure about it right now. I say you have to wait for a pullback. That's a stock that has been rising tremendously, but There's a lot of healthcare stocks that you could buy. AbbVie also give a very good dividend, so you could look at AbbVie and you could wait for a pullback. And Eli Lilly, I still think Starbucks once China open, because we cannot wait to buy these stocks when China open. By the time it open already and everything come back, it will be too late, guys. So definitely think about that. We still want to think about our oil stock. Coterra still remain good. As I said, Pioneer, PXD, Pioneer Natural Resources. That's the oil stock that gave one of the highest dividend. So guys, consider buying all these stocks, guys. And I still encourage you to join the CNBC Investment Club. It is a great value for the money. They give a lot of stock advice. I can only show you this much, but there is so much more than the video. If you can't afford that, you can always join my Patreon for $5. I try to share some of my knowledge on there. Anyway, guys, thank you for watching the video. Please don't forget to comment and subscribe.